Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's analysis and recap. I said that in the wrong order, but regardless, let's go ahead and jump right into it. So I want to go to the 4-hour time frame, if I can talk right. And I have a ton of drawings on here. I do apologize. I'm going to delete that call wall and put wall. Not really relevant at the moment. But we have this selling channel, okay? And this selling channel has been super persistent basically since the almost beginning of July. And today, I was actually surprised how well it rejected. It rejected almost to the penny. However, we had that major rejection, and that happened in the pre-market, okay? Now, one thing that I want you to pay attention to is this resistance. We had a major resistance at the 746.40. Well, that pre-market price got to the 746.53, so only 13 cents above that price before we had basically the, the waterfall turn on. Now, with that said, we did hit the bottom support here. We hit this 735.72, and that's the support from Thursday. So it's a very important support, but I do think that we're going to try to break that tomorrow. Now, with that said, the reason why I think we're going to break that is because we have a very well constructed head and shoulders going on here. And not only do we have the head and shoulders, this is also an inverse cup. May not look like it exactly because it's kind of wonky, but we don't judge. And from that inverse cup, we expect a handle. Now, from that handle, we can get an additional nested handle, okay? Now, I'm not fully expecting that, but if that does occur, then that might mean we can start building some support on these ranges and heading back up towards the top of this support channel. Basically heading down, building some support during the trading session, heading back up, maybe through the after hours and pre-market, and heading back up to that range. But I don't think that's going to be the case here. I think that very likely we're going to see a major breakdown and continuation into tomorrow, heading towards that 731.95. Okay. And from that 731.95, that won't be the bottom of the channel just yet. Okay. As you can see, we still have a few more sessions this week. Obviously, it's just Monday. But on Wednesday, we have FOMC. Okay. Now, FOMC very likely going to try to push downward. Okay. Now, we have a very crucial support at the 726.63. However, it doesn't look like we're going to hit that range until about Thursday or even Friday. Okay, so for FOMC, we'll have to see how that goes. Currently, the odds are heavily in favor of a pause, but there's still that very large chance of the rate hike, okay? Usually when we go into FOMC, and I've discussed this in my videos and everything, but usually when we go into an FOMC, we start seeing the odds shift basically almost to like a 99% for what's going to happen. Currently, we still have major indecision going on, and you can see that very clearly right here. We have the 62.1% chance of a pause and almost 40% chance of a hike. That is extremely high. It may seem like this is the lower odds, very likely it's not going to occur. This is one of the first times in 5-6 years that I've seen the odds skewed like this for an FOMC that's literally just, a day and a half away. So this is something to be very cautious of at this point, that the market has not priced this in. This is major indecision. Okay. And when there is major indecision, there's very, very large moves because this means that the bond market and the equity market are not in agreement here. Okay, if there was an agreement here, then we'd be seeing again 90% on one side, 10% or lower on the other side, and that's not what we're seeing. So that's very, very concerning moving into this FOMC. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Now, I want to go ahead and hide the drawings here and pull up the Bollingers. Now this is on the 1 hour time frame, but this is showing that we do have some room both to the top end and lower end to basically pull up or down. We're not overextended on one side. We did push into the lower Bollinger on the hourly earlier today, and from that lower Bollinger push, we started to see a little bit of reprieve. However, on the daily time frame, the lower Bollinger is at the 736.45, so it has been climbing quite heavily. And that's due to the fact that the 20 mile, even though it looks like it's pulling up in this situation, it's basically been consolidation, or in a consolidation. When it's in a major consolidation like this starts to contract the Bollingers into the 20 mile. And from that, usually very, very large movements happen. We see contraction earlier this year, where the Bollinger was basically right on top of that 20 mile. We were trading from the upper Bollinger to the lower Bollinger, upper Bollinger to lower Bollinger, rinse, repeat, until we finally had the breakdown. And from that breakdown, we see that the Bollingers start widening, and then we start heading upward on the good news. Now we're starting to get into that same type of period where we're starting to see this major consolidation and contraction of the Bollinger Bands, and that can lead to a very large push to the downside. Now on our downside target, we still have, and I want to pull this up, we still have the 726 available. And based on the current structure right now, it's looking very, very likely we're going to hit that extremely soon. We haven't fully invalidated this bullish cup yet, but basically this handle's so extended that this is an invalidation. And this is starting to, sorry for all the drawings, but this is starting to create this very large inverse cup. Okay, now the 726.63 I thought would be on the table this week. It still could be. It might be later in the week, but based on where the daily lower Bollinger is, it's currently at that 736 range. And we do have that major support at the 731.95, which means that if we're going to get a lower Bollinger push, we need to push under that 736 and close below that. And where's the next target for that to be? Basically, that's 731.95. So I don't think that's going to be hit tomorrow, but I do think that we're starting to build liquidity for that. Okay, again, going back to the hourly time frame, and I know I just showed this, but this is a very strong bearish structure. Okay, we have all the liquidity we need to do a lower Bollinger push. Now, a lower Bollinger push at this point would make a lot of sense because generally we expect a push for the lower Bollinger day one, closing below that level, and then day two a lower low. Well, over the next two sessions, and that's what's highlighted here. It's hard to see on your screen probably, but in the black here is during the intraday, and the black is during the intraday. That would align almost perfectly with hitting that support. And from that support, we could absolutely start seeing some reprieve into Thursday, Friday, next week, etc., etc. So my expectation at this point is still to head downward. I am heavily positioned to do so. I've been taking SQQQ calls for September 18th. Currently, I have the 50 strike calls and the 55 strike calls. Those are going very well. And I did pick up a lot of those 55 strike calls today. I picked up the 50 strike calls a couple weeks ago. However, it's starting to really see some, fruition from this point. And one thing that we need to be aware of is how deep these cells are starting to get. You can see how almost in a single session, we go from the top of the channel to the bottom of the channel, almost all the way to the top of the channel to the bottom of the channel. The selling is starting to get pretty extreme at this point, and the bearish sentiment this week is, incredibly high. I think the only really redeeming quality of this week in the bullish aspect would be that potentially one of the earnings could do well. Potentially we could get some good news from the Iranian conflict, but also those could be bearish catalysts as well. You know, um, President Trump tweeted today that basically there's not going to be a whole lot of time for Iran and the United States to write up an agreement at this point. He wants this conflict to end quickly, or he's going to try to end it quickly. So, everything that I've been hearing from a lot of military people, which I'm not going to go into specifics or anything because that's not allowed. Um, they're really gearing up for a big conflict. Okay, it's to the point where I'm actually considering positioning or closing my September oil shorts because they're really, really considering a major conflict going on. Basically, um, bombing the entirety of Iran. Um, Not ground forces, but there's been rumors of it. So I'm not happy about that. I don't like war, but I think President Trump is pretty serious about this at this point. That if these, Iranian officials are not going to come to the table and they're going to still keep playing games with bombing these boats after we sign a ceasefire and an MOU and everything, that potentially we're going to end it on our terms. So that's something to be aware of. And again, the final thing I'm going to close out this video with is that we still have South Korea changing their margin requirements. Okay, so they're requiring a lot more money slash equity to be held to open up their margin, which means that there's a very high likelihood that we're going to be seeing a lot of selling throughout the week for a lot of firms to position into that. And we could see that in the overnight almost every single evening that the Asian markets have been going very, very hard with selling. Now, last thing I want to show for this video is the moving averages. Today we had the 5 daily 5-day moving average, excuse me, at the 742.38. It's probably closer to that 743. I don't remember exactly. I do remember checking it this morning. It was at the 742.70 something. So very close to that 743. Now it has crossed underneath the 50 the 20 the 10 and we're starting to see the 10 getting ready to cross underneath that 50 as well. It has crossed underneath the 20 and with the 5 and 10 being underneath that 20 with that 20 is going to start pulling downward. Okay. That means that a lot of momentum into equities are going to start pushing to the downside as that's technically a short-term bearish market. I don't want to say a bear market, but it's short-term bearish positioning in the market. Now, when we see the 20 the 10 and the 5 crossing underneath the 50 then we're in a short-term bear market. Okay. The next thing we'd be looking for a very long-term bear market is for those moving averages to cross underneath the 200-day moving average, but we're still very far from that, so we're not going to focus on that. I just want everybody to be very, very aware that basically every time we've been trying to push upward, it's been met with massive rejections. And that's what all these different resistances, these red lines on the chart are. These were ranges where we were thinking we were going to turn bullish, and then all of a sudden it just started dumping. Thinking we're going to turn bullish, started dumping. Thinking we're going to turn bullish, started dumping. Rinse, repeat, rinse, repeat, rinse, repeat. And we hit one of those ranges today. And it's still holding exactly within the selling channel. So until the selling channel breaks, we need to just trade it smartly, meaning the expectation should be from the top of the channel to the bottom of the channel to the top of the channel to the bottom of the channel. Rinse, repeat as we continue to break through these support ranges. So tomorrow I am expecting downside. I don't think we'll hit the 731, but I don't think it's out of the question either. Um, Especially if we break through these two support ranges at the 735 72 and the 735.21. Those are basically the next nearest supports, and we really don't have anything underneath that besides the 731. So if there's going to be a major sell, again coinciding with the lower Bollinger on the daily time frame, that would make a lot of sense. Now, we will have to check where the gamma levels are in the morning, so make sure you pay attention to that. Make sure you pay attention to where the max pain is, because the market has been trying very, very hard to trade almost exactly to where that level is. So, okay, that's going to be the market recap and analysis for tonight. I hope to see you in the stream tomorrow or in tomorrow's video. Take care, everybody. Thanks for being subscribed. Thanks for liking the videos. And if you could share it with anyone who also values technical analysis, that'd be great because I am trying to, grow the channel and get more viewers. But if not, no worries at all. Take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.